The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the November 13th, terrific Thursday edition of Hour 2 of the Trader's Edge. And thank you to Tom and John for covering for me for that first hour. It is great to be back in the saddle again. Of course, I'm your host, Steve Rhodes, and hope that you are off to a fabulous start of your day. Let's make sure that you and I, that we do everything we can to have one heck of a terrific Thursday. And let's always remember that what's talked about is a dream. What's envisioned, well, that becomes darn right exciting. But what's planned, that becomes possible. But most importantly, what's scheduled is reality. And I want to thank you for scheduling your time with me. I am absolutely grateful for your presence here, and I'm here to serve you. That means if you give me a call at 877-927-6648 or internationally at 727-445-1044, well, then I can serve you even better. Remember, if you've got a question, somebody else has that same question. So don't call in for me. Don't call in for yourself. Call in for them. And that's considered a random act of kindness. And that is the way that each of us should live our day. It is terrific Thursday. This is TFNN. I'm Steve Rhodes, and welcome to the show right now. The Dow is up 53 points. She's trading out at 17,665. We've got the S&P up 5. She's trading at 2,043. Russell 2000 up just slightly out here. The composite is up 25 points. The DAX up 40. FTSE's up 20. Goldilocks up $2 right now. Although I see a bunch of silver, or some gold and silver stocks here trading to the downside. We'll check in on those. Silver's up 3 pennies. U.S. dollar index, she's back about 8 cents right now, trading out at 87.82. The euro looks to be on the move out here. The euro Japanese yen most certainly on the move. That is what's putting in the fuel into the tank of these markets out here. So let's not delay. Let's start by taking a look at. I didn't get a chance to listen on the show for the first hour, so I do not know where Tom or John left off and what they were talking about. So I'm just simply going to go. Let's go right to the indices out here. Let's do this here first here. Let's go to the 30-minute futures contracts out here. That's going to be the easiest way for me to just kind of catch up and see what the markets are doing. So, all right, we've got the 30-minute NASDAQ out here, NQ futures. And if we take a look at it, what we can see here, okay, so let me just refresh this real quickly. Looks like a nice move here from the 9:30 to 10 o'clock session. Nice wide-ranging bar. This thing will refresh here. So a nice wide-ranging bar, of course, as it was doing that. It was making that higher high, doing it with some less relative strength out there. But it looks like it's trying to resolve that pattern. We're trying to resolve that pattern as we speak right now. It is on its way to maybe doing, it looks like the 1 to 2.618. A to B equals CD to the upside out here. That's out at 42.29. That looks to me to be the next price target on the daily chart for the NQ. It is in that seventh wave up. Of course, it's a 30-minute chart that we're looking at, so that could not possibly even confirm until 11 a.m. this morning. So that's what's going on inside the NQ. Let's go see what's going on inside the ES, as well as this is the easy way for me to begin my day and get a feel for what's going on. So I'm going to start from the shorter-term time frames, and that makes it a little bit easier. So interestingly enough, the NQ here clearly stronger than the ES Mini, just simply because of that spike that we saw between 9:30 and 10 and being able to get to higher highs. We've not seen that take place inside the S&P futures. They have not got back up to the high that took place here at 6:30 this morning. No real reversal signs of any major significance out here, other than looks like the market profile highs out here. Of course, one just really formed itself, but I'd have to say the 2043, this little, that seems to be the resistance. We'll call the resistance really the high of that session here between 6 and 6:30 this morning. Come on, give me a little break here. Just off of the road, jumping into the driver's seat. 2043.75 is going to be the next resistance area. If we take a look at A to B equals CD patterns to the upside here on the 30-minute chart, my A point's going to start down here at 8:30 yesterday morning. My B point's going to be right up here. It looks like, at about 2 o'clock yesterday afternoon. A little bit of retracement, about a 50% retracement. So we can see it's made the 1-to-1. Next level up about 2044. If it can handle moving to higher price out there. That's what's going on the 30-minute chart for the S&P futures. Let's take a look at the 30-minute chart here for the Dow futures, get a feel for what they are doing out here. So the Dow futures, similar to the composite, with the exception that the composite was able to reach the higher highs with that big up thrust, I believe it was, at that 9:30 session. The Dow unable to do that. So the Dow here on a 30-minute basis have found resistance. So a key level to be watching inside the Dow futures today is going to be this 17,600-ish area. Looks like a new profile just started. We'll call it 17,635. Let's just give that as a number. We can see that becomes resistance. Get above that, and then that becomes the opportunity for a move higher in the markets, clearly. They're really struggling here. If I were to take a look at and try to create an A to B equals CD pattern, there just simply was not enough of a move to the downside up through this time of 2 o'clock this morning. If I were going to create anything, would be the retracement coming back into 9 a.m. This morning. So we'll take a look at that if, in fact, during the next 45 minutes, the Dow is able to catapult above the high out here. The high that I'll be looking at, that would be the B point, which would be the price point of 17,638. So 17,638 is going to be a key number today inside of the Dow. Let's finish this off by taking a look at the Russell 2000. I've got a 10-minute delay on this, so my apologies for that. But at this stage here, this thing made seven peaks, 7 counts to the downside here yesterday at 8:30. Gave a nice little price relative strength divergent pattern. One of the patterns that I will be teaching you how to use, how to trade in my upcoming workshop that is next Saturday, November 22nd out there. So I'll be teaching that to you. Of course, that combined with making a 7th move count to the downside out here. And now we see that it stopped right up there at 7 waves to the upside. You got to like those G's. At least I love those G patterns out here. Now, I was doing it with a wide-ranging bar. That was at 2 o'clock this morning. It's backed off just slightly out here. Maybe it is trying to recharge its batteries. Now, the IWM yesterday, having closed above its previous level of resistance and swing point, which I believe it took out with volume out there, suggested it actually wants to go trade back to the top of the consolidation zone. So that's what's going on inside the 30-minute chart for the futures. That just helps me to get a better feel for what might be going on, at least intraday, intra-session. So now let's go back and let's take a look at what is going on inside of the ETF structures out here. Let's take a look at the QQQ series out here. The Q's up to new highs here again this morning. They've been doing this with light volume so far today, 5 million shares. So actually in the first 45 minutes of trading, that's not such light volume out here. Of course, I don't know how that compares to the first 45 minutes of trading the prior few days out here. So what is it that the Qs are doing? Well, if we take a look, there's really 2 patterns that are underway out here. One pattern is going to be an expansion of swing points. That's your 1.272 expansion of your swing points from September the 19th down to your low on October the 15th. What price point is that? Good question, 103.37. What's the high that we're at right now? That high is at 103.22. So we're only about, 15 cents or so away from that level. That could be a stopping point. We're going to go check on the summation index. Well, really, we're going to take a look at the price oscillators, get a feel if there's any change, any shift in momentum inside what it is doing, or whether that's just continuing to track its way lower. So that's Uno number 1 pattern out there. If we take a look at the secondary pattern, this is the pattern that it's actually trying to set up going into the Santa Claus rally, at a minimum, the Santa Claus rally out here. And that's where we go back to the February 5th lows. We go back to the high on September the 19th, and we take the low. The C point is going to be our October 16th level. And if we take a look where price is headed to, if it takes out 103.37, then 107.42, volume or not, will become the next target. That's your 1-to-1 A to B equals CD. Also happens to be right around the range of the 1.618 expansion of our B to C swing point. That is what's going on in the Qs. We want to continue to pay attention to the Qs. Now, the Qs have given the absolute best indication of a market that's still, and I have not flinched from this position that the market still wants to pull back. At least that was the signals as of 8 o'clock or 7:30 this morning. So I haven't come back to take a look at those, but we will. So that's what's going on inside the Qs out here. Let's take a look at the IWM as a see what is going on out here. Now, in the case of the IWM, she got up over the resistance, potential resistance, turned out maybe not to be resistance, the September 3rd swing point. In the other ETF structures, we take a look at September 19th. Not the case inside of the IWM. Its correlating swing point high was September the 3rd. 33 million shares as it made that high. What did it do yesterday? Closed above it with 34.5 million shares. As long as you stay above that, that says that now you come back and you test the top of the consolidation. Where's the top of the consolidation? Top of the consolidation, really, you can use the swing point out here from March the 4th. That's the 120.58 level. You could use the swing point from July the 1st. That's the 120.97 area. That is the range. So long as price inside the IWM stays above 117.80, we're going to see price inside of the small caps move up to that 120.58 level. That's going to be 120, we'll call it 121. Let's not get too tied into the pennies out here. And you get above 121, then you've got the possibility of that move of, 13.5 bucks inside the Qs, 135 points inside of the Russell 2000. Of course, we know that once the Russell 2000 on a daily basis breaks out above this level, she will head up to the 1350 area. That's the Russell 2000 index, where that will go ahead and complete its, I don't remember, was it an 11-year, a 10-year, a 16-year consolidation measured move? That is what that's really the signal that we'll be looking for to confirm that Santa Claus rally out there, because it'll be the Russell 2000. It is the Russell 2000 accused, truly leading the way to the upside out here. As long as they stay in the number 1 position, number 1, 2 positions out here, it just simply bodes very well for the markets. If we go take a look at the SPYs, yesterday the SPYs had a little bit of a flattish, slight pullback day out here. We take a look at the SPYs, and we take a look at the expansions of swing points, the 1.272 from September 18th down to the low on October 15th. In the case of the SPYs, unlike the Qs, which are very close to it, the SPYs are not. So the SPYs are a little bit weaker than the Qs as we take a look at that measurement, 207.27 or 204.63. That's the level that the SPYs will need to get up to. If the Qs make it above their 1.272 expansion, that says the SPYs will make it to 207.27. And the Qs will go ahead and make that 1.618 expansion of its last set of swing points. Let's go take a look at the Dow Diamonds out here, just to wrap this up. Up 66 pennies out here over the long haul, maybe over the short haul. This thing wants to get to 178.50. 178.47 is your exact 1-to-1. A to B equals CD to the upside. If we take a look at expansions of swing points, that means September 19th down to October 15th. The level of 177.41 could be a pit stop, where the Dow Diamonds would start to move sideways. Of course, if it can get to 177.41, why wouldn't it move all the way up and complete the 1-to-1 A to B equals CD at the 178.47? So 178, in essence, becomes the target for the Dow Diamonds. Now, that's what's going on there. What's fueling the fire out here? Well, it's really pretty simple. It is the euro, Japanese yen. At least that is my belief system out here, because this currency pair tracks so well to the U.S. stock markets. And I don't mean just well, I mean really well. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 59. S&P is up 5.5 or so. Composite up 26. Okay, so we took a look at the what at this stage here are the current price projections inside of the ETF structures out there. Before we were headed into break, we were taking a look at the Euro-Japanese yen. Absolutely the best currency pair. Let me show you the correlation out here. Let me do this. Let me switch over and pull up a chart out here. Come on, work with me. I'll pull this one back up. But let's take a look at the Euro-Japanese yen versus the S&P. So if you're watching this on Tiger TV, the bottom portion of my chart out here, that is the S&P. It's the ES-mini, so it's the S&P futures out here. And when divergences occur, and they can go on for quite a while, when divergences occur, they tend to resolve themselves in the direction of the currency pair. If you're just watching this on Tiger TV, actually, if I put up the NQ out here, you'll even see a better correlation. But you can see coming off of the lows out here inside the Euro-Japanese yen, it too was giving us really a divergent pattern as the lows were being made back in October 15th, we see how the euro Japanese yen has just taken off to the upside. Look, there is no divergence here whatsoever as we speak right now. So that's the first thing. But most importantly is really the mere fact if we go see what the currency pair is doing. Now, it's a directional. It's not a tick for tick type of. I wish it was a tick for tick. It would make life a whole lot easier. It's not a tick for tick. It's a directional indication. But if we take a look at that directional indication, get a feel for what the euro Japanese yen is doing, it's clearly making a run for the highs out here from the day of December 27, 2013. Now, the euro made its high December 27, 2000. The euro Japanese yen made its high December 27, 2013. Our markets made their high on December 31st. Then we saw the markets move lower, right? The markets move lower and our markets into what? Into February 4th, February 5th. Well, if you take a look at the euro Japanese yen, just to understand the directional correlation aspect of this currency pair versus anything else that's out there, this made its low on February 4th out there. So how important is it? And if you take a look at the at a high that was out here inside of this currency pair, September 19th. So September 19th, we saw the euro make a swing point high, and our markets, of course, with the exception of the Russell 2000, made a swing point high when? September 19th. Do you think there's a coincidence? No, there's no coincidence. It really is. So you don't have to trade the currency pair or any currency pair. But, boy, you sure want to know what's going on inside these currency pairs. If you take a look at our markets, they made a low when? October 15th, October 16th. When did the euro Japanese yen make its low out here? Its swing point low? October 16th. No coincidences out here. Therefore, with regard to our markets, the direction of the markets, understanding the liquidity aspect of the markets, it really is, you want to talk about, hey, no QE, just go pay attention to the liquidity gauge of the euro Japanese yen. Again, I wish it was tick for tick. It's not. But what we do know is we've got a treasure out here to make sure that we understand what's going on inside this currency pair and to look for reversals, look for breakouts, look for all those patterns. So very clearly at this stage here, we saw the currency pair back off just a tad yesterday. It has begun to move higher. Man, that's not really resistance. It's not a reversal candle. The reversal candle is right here. So I want to show you something. Here's the reversal candle, key reversal session. Now look. A true key reversal session requires three things. There are a lot of days where they are reversal days. Reversal days and key reversal days, two totally different meanings, two totally different things out here. In order to truly be a key reversal day, you must have three things. Number one, you have to be in an extended condition. Now, there are a number of ways to measure that. I say one of the easiest ways to understand a extended condition is just take a look at the relative strength, relative weakness indicator out there. If you're at 70, near 70, above 70, you're stretched. If you're below 30, near 30, you are stretched to the downside. In this case here, you're the trading session of, let's take a look at the trading session here of November the 5th, RSI reading 77.10. Very next trading session, so that's out number one, out of the way, done deal, extended condition. Number two, the body of the candle itself, not the body, the upper extreme, lower extreme, needs to exceed the prior day's candle. Well, or bar, whatever you want to take a look at, whatever you're using out there. Well, we had that here on the trading session of November 6th. And totally, we had a high that was higher than the previous day, a low lower than the previous day. That's number two that you need to have in order to have a true key reversal day out here. And then what do we have? You just need to close one pip, one tick, 1 penny, whatever it is that you're tracking in the opposite direction. That's all that needs to be done in order to have a key reversal session. They are worth paying attention to. They do set up areas of resistance out here. Well, in the case of the euro Japanese yen, that resistance then is 144.22, 144.22. That is the high from November 6th. Any close above that says you want to go to the next level. You're trading 144.26 as we speak right now. The next level is 145.68. So the retracement into next Friday looks like it's just on pause maybe for a day or so. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 84 right now. S&P up 7. Composite up 27. Russell 2000 struggling here to get out of the gate this morning, up $1.60. So let's go take a look at what things could get in the way. What clues? You know, we had clues that the market was giving us when the market was moving down into that October 16th level. And it's really those same clues out here. We're just using them in reverse direction that suggest still that a pullback is going to occur out here. Now, and I'm talking between now and next Friday. So the timing of it, at least that's what I'm going with at this stage based on some other patterns that I'm looking at out here. And I'm going to start off with the New York Stock Exchange. And it's New York Stock Exchange. Hey, look, the market's up nicely this morning. Well, let me see what the New York Stock Exchange is actually up. Let me flip back out here real quickly. I went to the wrong page. So you got the wrong page again. The NYSE, it's up, come on, where are you, little puppy? You're up 26 points, up 0.25%. Now, it's up 0.25%, only 308 net advancing issues this morning here. That says the price oscillator is actually ticking down as we speak this morning. So remember, let's just to kind of review where we're at. As the New York Stock Exchange was making lower lows, what we saw here was the price oscillator. That's the bottom portion of my screen. It was making higher lows out there. That pattern, you go back as far as you want. When that pattern, especially when it got down into the minus 200 range here, which is the kind of like the extreme oversold-ish area, when it gets down to there and then you start making higher lows, it's an indication that you're going to see a reversal. Well, we've seen one heck of a reversal. That reversal is going to continue on through the end of the year, but not until there is going to be some kind of a pullback. Now, the market's been moving sideways, and really it's just taking a look at what's taken place in the past. It's not going to be the same kind of a retracement that we saw inside the New York Stock Exchange when the market made its high. Now, the NYSE did it on September 4th, right? We had the IWM or the Russell do it on September 3rd, September 4th inside the New York Stock Exchange, and really things began moving to the downside on September the 19th out there. The price oscillator starts getting below the zero line out here, then maybe it just says a little bit deeper correction. But you can take a look at over the past out here when you've seen this pattern, we've seen some kind of a retracement. You saw it back in March of 2014. We certainly saw it back in the time period here of September of 2014. I can keep going back further and further and further on the left-hand side of my chart out here, but it's just then it gets too scrunchy, so I don't want to do that. So we still have that same signal that we use to be able to call a bottom is also, now this is not the top, this is not a major top. We're in the favorable seasonal cycle out here, and then we're in a second-term presidential year, and we had nice big Zweig thrust confirmation, which, those are rare. We've seen 4 of those in like the last 30 years. So all these things are really what point to higher price going into the end of the year, at least the end of the year out here. But there's going to be some kind of pullback. And we've got the confirmation not just inside the New York Stock Exchange, we've got it inside the composite as well. So you got the composite up nicely today. It's also making a declining price oscillator move. If we take a look at the Dow is really doing the same thing. So we've got the Dow could really, the Dow could upset the party. It could spoil the party and say, hey, Steve-O, I don't really care about your price oscillator. I'm going to go ahead and I'm going to take out the highs back from October 31st. There is a possibility of that taking place. And then if it does, then we come back and we reassess. But at this stage here, we've got some indications, some correlations out there that say not so fast. However, it looks like with the euro Japanese yen doing what it's doing, the prices are going to move higher, probably into those levels we looked at inside of the ETFs, those expansions and or A to B equals CD patterns out there. We had a request to take a look at China Mobile. Let's take a look at this from one of our dinners out here. Ticker symbol is CHL. The problem I have in providing any kind of analysis on China Mobile is this stock here is so tied to currency that because you look at the stock and all you see are all kinds of gaps and so forth. And so therefore, knowing that this is as currency related as perhaps anything else out here, I can't provide you with a great place to buy in on this, because you really have to tie this to the current. In my opinion, you really have to tie this to the currency moves, and I'm assuming that's the RMB, the renminbi, RMB out there. And so I'm not. So I know that somebody would like me to provide you with some information out here. I just, all I can say is I would say you've got a high volume bar out here at the support level really from August 14th, and that's right around 58.85, 56.80. And I would say search for something better. Search for some better stocks that have got other patterns that maybe aren't so tied to currencies out there. Now, folks, not this coming Saturday, but next Saturday, November 22nd, I'm going to be doing a 7-week program, a 7-week trading, a coaching, a mentoring program for all of you. And it doesn't really matter what level of trade. Now, the first question might be, well, how did I come up with this 7-week trading program? Well, first of all, I would never, ever ask you to do something that I wouldn't be doing myself. And I'm actually doing a program that's 16. It's at least a 16-week program. Many of you know that you know my natural energy, right? And the energy that I have here on the show, it's who I am all the time. So it is, whether you think it's all positive, it's just really about, it's just learning the process of being able to reframe things. The universe always throws stuff to us, and we have to determine whether we're going to reframe that in a positive way or a negative way. It's really our choice. So I'm, and so some of my mentors in that area have been guys like Tony Robbins, Jim Rohn, Earl Schoaf, Chloe Madonis and Tony Robbins have put together this program. They put it together quite a while ago. They started maybe about 6 or 7 years ago. I'm actually doing it. It's a 16-week program that would give me the credentials to become a strategic interventionist, which would be pretty cool. How I'm going to use it, I don't know. To me, it's just furthering my education about understanding why each of us do what it is that we do and being able to really help people. So part of that, so knowing that, and because it's an area that's new to me, I understand for any of you where trading and investing is going to be new to you, the importance of wanting to have a little bit of hand-holding. So this is a 7-week program for that type of handle. It doesn't really matter what level you're at. This program I'm taking, and there's quite a few, there's like 1,000 people or so that are doing the same program from around the world. There's all kinds of levels that are in there. So I'm at the bottom rank of that level versus people up at the upper end of the level, and I expect that we'll see that inside the 7-week trading course as well out there. So what we're going to cover during that so it's got that personalized hand-holding approach, 3 hours on Saturday. If you can't be there on Saturday, it's going to be archived, so you'll be able to, access that. You're going to be able to access me by email, by phone, by Skype, whatever it is that we need to do in order to be able to allow me to answer questions for you. We're going to take a look at mastery. Now, it's always about little tricks out there. So I decided that I wanted to pursue that because I wanted to understand what the chef was doing, what they were doing. I want to understand what Tony Robbins was doing when he was on stage and what his little tricks were. It's just like going into in my opinion, this is the metaphor that I use, like going into a kitchen with a experienced chef. They're going to provide you such little tricks out there that you are going to be like, wow, that's pretty cool. And it's really all those little things, all those little signals out there. So we're going to be covering all those with regard to buying and selling the D point, with regard to Gartley and butterfly patterns, both sell and buys, with regard to Japanese candlesticks, which is so important out there, so that you can instantly be able to read the message of the markets. We're going to take a look at early warning signals, these leading indicators, these divergences that have meaning. We'll take a look at the Rhodes momentum trading signals. We'll take a look at the ultimate, your back is up against the wall type pattern, so that you can easily take a trade. It'll be covering the money management piece of it, the stop. So 3 hours on Saturday, which means I'm going to really condense a lot inside a small period of time. Now, that's cool because I get to go through all my materials and really just teach you the best of the best, just what it is that you need to know. Then it doesn't stop there because we've got 6 additional weeks where I'm going to be providing you by each Monday morning because we're going to follow some specific instruments. How about that? We're going to follow very specific instruments over the course of that same 6-week period of time. Some are going to be on intraday periods, like a futures contract that's basically trading nearly around the clock out there because we have more price moves. So you're going to be able to track exactly what it is that I teach, those patterns so that you too can follow that. You'll be able to follow that. We're going to take a look at some individual stocks, but the bottom line is for a 6-week period of time, that which I teach is going to be documented so that you've got that for, and then we're going to come all back together. We're going to reconvene on Friday during live market hours. It'll be, we'll answer some of the key questions, some of the common questions that have band asked during that 6-week period of time. We'll take a look at doing some live trading during that 9 to 12 period on a Friday. And it's the cost, this is just over $1 a day. And that's for a 1-year period of time. But these are going to be tools that will last a lifetime. This is about for me, just so you understand, this is about being able to create lasting change. When I do something, especially, look, each of us here at TFNN, Tom's a leader, and if you take a look at Tom, he pretty much has it laid out there. We become better when we do. When we provide more than who it is that we are, when we provide more for others out there. That's probably the coolest thing about TFNN. You take a look at any of us out here. So whether that's John, who kicks us off in the morning, or Basil, who's coming up next, or Daryl Martin, or David White, or Andy Heck, all of us have all of this in common. That we know in order for us to really become for us to be happy, we have to give beyond ourselves out there. And so we'll be doing that. For me, this is about being able to make lasting change in your trading. So if you're a subscriber to Mastering Probability, you get $100 off. So it's only $2.95, so it's less than $1 a day out there. So I hope to see each of you out there. But I thought it would be good for me to be able to help describe to you what it is that we're going to do during this workshop. And maybe, it's always better when you understand, hey, what's the drive behind somebody? What's their passion? So a lot of those positive things that are just simply, and look, they're not, all of us get thrown all kinds of stuff in our life. You can use whatever you want to with a word that begins with the letter S, and it's really all about how we process that. Nothing could be more true than the markets that we trade out here. Nothing could possibly be more true than as the markets were moving down and being able to go and take a look at a set of indicators and tools out there, whether it was the A to B equals CD pattern that was making the 1 to 1.618, whether it was understanding candlesticks such as was inside the S&P 500. Nothing could be more important than understanding the psychology of the marketplace, because that's really what we do out there. And you've got to also understand the psychology of yourself. And so that's something that I think that each of us want to improve upon each and every day. This is nothing about the technical piece of it is 20%. It's really all about we're reading psychology of the market. That's why Japanese candlesticks are so important, because they are the tool that helps us understand the psychology of the marketplace out there. If each of us could just simply turn off the noise of all the other influencing things out there, and then just focus on the patterns that we see, we'd all be in really good shape out there. And so, and then go ahead and turn that noise on, and maybe pull from different things, because everybody and everything around us is truly a teacher out there. So that's why I get jazzed up about what it is I do, and what I'll be jazzed up this coming, I'm jazzed up every day, but especially coming next Saturday on the 22nd. So all the details are on the homepage of TFNN.com out there. So let's take a look at some things here, some stocks that are moving in the marketplace here this morning. Let's take a look at what's not moving. Let's take a look at gold. So you've got gold's up 250, and I see a number of mining stocks. I'll go switch over to my mining page. We'll see what they're doing as a group out here. And if we take a look at gold, just really consolidating here, at the lows. So it hasn't done a whole lot other than it did give us a key reversal session on the trading session of November 7th. So just like we took a look at the Euro-Japanese yen, which is trying to break above the resistance level of its key reversal session until gold takes out the low of November 7th, which is at 1130.40, then gold is attempting to form a bottom, just like the euro was attempting to form a top, and it has failed. The Euro-Japanese yen, I should say, has failed to do that. Now, we're just really trading sideways, up a couple of bucks, not a big deal. Let's go take a look at the mining equities out here. You can see they're pretty much mixed. If I just simply go ahead and sort on, let's do a sort this way, sort on the change out here. Yeah, you can see really a total mix. It's almost about 50-50. As far as anything really moving to the upside, it looks like El Dorado Gold, EGO, and Allied Nevada. Let me just do it by percentage change out here. So you've got actually Great Panther. So, but it's up 5 cents, up 4 cents. That's up 5%. Not a big deal. And Sandstorm Gold, that's up 3.5%. Not that big of a deal out there, but 15 cents in El Dorado Gold. Let's just take a look at El Dorado Gold out here, see what it is trying to do. So in the case of EGO, if you are in this trade, what you should be focused on and paying attention to is the resistance line. That's $6.02 out here. That happens to be the low of the October 30th session. And then you had some additional puking going on October 31st as funds just finally said, I'm dumping all these mining stocks. I don't want them in my year-end portfolio statement. And that, in my opinion, is still what went on between especially on October 31st, in unison out here. And now you've got the bargain hunters. Well, look, if you're not a bargain hunter and you don't want to get in on some of these stocks down here at these lows, I totally get it. In case of El Dorado Gold, you got a high volume low. That could be tested. That's November 5th. That's around $4.95. $4.95 may be the buy on it. However, if El Dorado Gold, if EGO can close above 602 out here, you can see that was resistance yesterday. That's from the gap. The beautiful thing about gaps versus wide-ranging bars are gaps, which really, in essence, are wide-ranging bars. If you go ahead and fill them in visually, is that gaps give you those level 1 and level 2, support 1, support 2, resistance 1, resistance 2. In this case, we're really looking at resistance 2, and that is at $6.02 pennies out there. You get a close above that, and that would bode well for ticker symbol EGO. To the downside, percentage-wise out here, looks like I am gold. IAG is the ticker symbol, but really not that big of a deal out here. Looks like it is actually testing its high volume low from November the 5th out there. That means it needs to close above 244. Volume there was 19 million. Today only 2.7 million. So you get a test of a swing point with lighter volume. This is Steve Rhodes in TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
does that song go, folks? You've got trouble, my friend, right here in River City. Man, New York Stock Exchange, net advance in issues 202 with the Dow being up 92 points out there. Definite problems. Let's go to Maria in New York. Maria, thanks for calling. Thanks for holding. How you doing this morning?
I'm fine, thank you. Sorry to have cut yesterday.
That's okay.
Yeah, I just have a question because I was listening to you yesterday talking on the Tom O'Brien show, saying that you were seeing a sell signal on the NASDAQ, or you put I guess you got stopped out,
Correct.
like all of us. Now you're seeing basically a consolidation or at least a retracement going into the 20th of November, and I was wondering what makes you see that on your charts.
That's a great question. Now, let's see if I can do this here. So give me a moment to try to find on my computer what it is that I would show you. I'll explain to it. I'm going to try to really multitask here. Actually, it's going to be I'm a guy. You know, for most of us, it's hard to walk and chew gum at the same time. We're not as skilled as you ladies out there. We say that we are, and we wish that we were. The reality is, you know better than that.
You're quite modest.
Oh, no. All right, so now let's see here. Come on, pop up for me. I'm going to put this on the screen as soon as I can find it out here. And the answer to your question, what I'm looking for is I'm looking for a seasonal pattern. So what I've done is I've gone back. Here we go. I've gone back and taken a look at the one of the ways that I was able to. Are you watching this on Tiger TV?
Yes.
Okay, great. So what I posted on my chart right here. This is the S&P 500 for the last 40 years. Now I went ahead and took out 1987 just because of the crash, just so that it didn't influence what we were taking a look at. And what this shows is the seasonal patterns. You've heard of the sell in May, go away, 6-month unfavorable, and some of that really comes from this. Now, when the markets were moving, and what I know, and what you now know about the markets here is that on average, they make their lows during the unfavorable seasonal cycle in October. To be specific, they make it right around October the 7th. Between October the 7th, 3rd, somewhere in early October is when they traditionally make them. So when our markets were moving down and I was saying, hey, the markets are going to make a significant bottom out here, what I had going for me was 40 years worth of history. What I also had going for me was the New York Stock Exchange that was making higher lows in its price oscillator. And it was really the combination of those two things. Just like I'm saying right now, there's trouble in River City with that price oscillator pulling back and price moving higher out here. The reason why I suggest that the market's going to, now this was off by about a week or so, the reason why I suggest that the markets are going to make a low coming into the October 20th time frame, if you take a look at what the markets traditionally do over a period of 40 years out here, they pull back into the time frame of October 21st. So that's Friday. So that's where I come up with that date. I'm willing to go ahead and, because I have to be able to shift that, forward or backward. So it may not be the 21st. And as we take a look at these markets, this may shift out to the following week. But the markets traditionally make their next low for that true summer to the Santa Claus rally right around then. Now, it is the price oscillators that have me with just as much conviction now that we're going to see some kind of pullback as they did as the markets were making a low. Does that help you understand at least why I'm saying what I'm saying?
It's very good. Thank you very much. At least I understand the seasonality. And now you were mentioning also yesterday that eventually you see a 480-point correction on the NASDAQ. I mean, what is the time frame for that?
Correction?
On the NASDAQ.
I just see a pullback. I don't see a retrace. Yeah, I don't see a major crash. I see these markets going higher into the end of the year.
Thank you very much.
You bet. Thanks so much for calling. Hey, folks, stay tuned. Our man Basil Chapman, he'll be up next. Again, thanks to Tom and John for filling in during that first hour. Have a great day, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.